Good afternoon, everyone. Chris Bretcher here with a small learning video on one of my fortes, the bear flag. So, what are we talking about in here? Well, you could go to ChatGPT, you could go all over internet, and you'll see 8 million things about bear flags. But the point is, you need to determine if it's an uptrend or downtrend in the first place. And the second thing, the most important, you got to be able to know where support is. So when you're looking at something, if something is a bear flag against support, it's less likely to work. Everything we do is about probability. So I thought I'd show you some of the examples of bear flags that worked and how you find them. So number one, I look at a lot of charts all at the same time. When I'm intraday trading, I'll use a 2, a 5, a 15, and an hourly. So when you see something like CRISPR Therapeutics, which we saw last week, you're going to go and take this. This is how I set it up intraday. I use a 9 EMA. I use a ATR trailing stop, and you know I did already a video on that. And what did we look at? We determined support and resistance. So the first thing I do, though, is determining the one time frame farther out trend. When you go to a daily chart, you're going to see, yep, I did a video on this as well. You had an indecision candle with a follow through to the downside. Now, a lot of people after that follow through say, oh, I missed it. Well, that's 58. Now go to a 15-minute chart. What are you going to see on here? That is a bear flag. Now, a horizontal line at the bottom after a move down, a sharp move, it's a consolidation formation. So here you have the doji and the follow through. Then you have the consolidation. The more horizontal that trend line, the more it starts resembling a ledge. We call it the Bretcher ledge. So your first step is definitely the follow through on a longer term pattern. So when you take an hourly chart, you'll see it there. Yep, the follow through. Look at that follow through there. That's pretty exciting right here. Follow through. Then you got the consolidation. And then you have to determine if that move has enough to do the expectation of the move. What do we mean? Well, most measuring patterns that I use have an objective. So if it goes down this amount right here, if it goes down this amount right here, then your first objective is that 222. Do you see that right there? Which can help you try to decide where to do option trades because that's your objective. So 222. So you take that here, 222. What happens? Well, it overshot. Now, why did it overshoot? Because on the way down, a lot of times it's animal spirits and people panic. But now go to the left. Where is the real support? We're going to take off all these drawings. We're going to take this off. You know it's in a downtrend. And I know that gets distracting. And how do bear flags happen? Because you get a temporary oversold condition. See the MACD down here? That's why I did already a video on ATR trailing stop and the MACD. We're coming up with moving averages. I'll show you in the next couple of videos. But there's your bear flag. You see it a mile away. Now what I'm going to do is take everything off. We're going to take off the ATR trailing stop, the 9. I'm going to take off everything. And then you're going to see where the prior tops were. See the prior tops? So your first objective is either the amount of that or at the minimum the prior tops. As you see, it just plowed through it. There's no reason to get out. But at least that was 2 points right here if you only wanted to make the little amount. Now, let's go take the ES. And I'll show you what we're talking about with the ES or the SPX for that matter. We'll take the SPX. So here's a small bear flag. I'll show you. We're going to remove the drawings. There's a small bear flag right here. See that bear flag? Not as dramatic because you didn't have that much of a move beforehand, but you still had it. Where's the support? Remember, the higher the market goes, the faster, the less support on the way down. So where's your support? Your support's down here. Now, a lot of people talk about filling a gap. I don't care about the gaps. I care about the path of least support. So a lot of times that is indeed the gap, as you see. So you had the bear flag went down to that area. It's a beautiful thing. So let's take another one. That's a 15-minute chart. You can go all the way back and you can find them. And the thing is, when I set up my screens, I have multiple time frames up so we can indeed find these. Let's go to the ES today. Did it show you anything? Because you know it's had a big old move. Did it have any bear flag on Friday? No, it looked great. How about this? Well, there you go. There's a bear flag, not as tight. So I like when the candlesticks are really tight together. Even though that did morph into a bear flag, I like the one we saw in CRSP. How about in here? Do you see any? Not really. Do you see any on a 1-minute chart? Not really. So this was slop. So there are defined times when you can find those beautiful bear flags, like right there. You can find the ones that don't have any support, like right there. And that's what you're looking for. Are you going to miss things? Sure you are. But we're trying to find the high probability patterns, which means a tight pattern that has a lot of points of contact and very little support underneath. And the prevailing trend is in the direction of the bear flag. Have a great day. Talk to you later.